I'm Bob Pisani. It's time now for ETF Edge as the trading community returns in force. What ETF sectors are likely to outperform in 2020? Joining us, John Davi, founder and CIO of Astoria Portfolio Managers. Armando Senra, head of iShares America. This is the largest ETF provider in the world. The man in charge is with us. And John, we're looking at some weakness in the transports today, notable weakness in the transports. Bernstein downgraded J.B. Hunt today and frets about a slowdown in the trucking business. We see some of those big names down today, like J.B. Hunt, and some of the logistics names like Landstar. Yet you're very big on commodities, which they transport in 2020. You think commodities are going to be up? Can you explain why?
Yeah, I think they're cheap. I think it's a play on inflation. On days like Friday and today, what happens? Stocks go down, oil goes up, gold goes up, gold equity goes up. So I think it's a nice portfolio diversifier to have.
Armando, you run the iShares China ETF. This is the biggest China ETF in the world. It had a great year, finally, after years of underperforming, up about 30% last year. Did you see inflows? Is there more investor interest in investing in China now that there is a little bit more clarity on the trade front?
There's an interest in China, and there's always a good play to have China in your portfolio. That said, for 2020, I would pivot to emerging markets. There's more room for growth with a pickup in growth globally. You also have the benefit of the availability to make changes in monetary policy. They still have room to move, especially emerging markets ex-China.
Why do you think, though, the emerging markets are going to do better? Is it partly a interest rate play, dollar a bit weaker? What's the primary rationale?
You have a couple of things. We do believe that there's going to be a pickup in growth, in global growth, in the first half of 2020. We also think that a lot of the markets in emerging markets have room to lower rates. And they will benefit from a more stable trading environment on the back of what we saw last year.
John, you have China MCHI as one of your top 5 picks for 2020 as well. Do you share his ideas?
I do. I think it's cheap, but I think that for EM to work, China has to work. So you're looking at like 20% EPS growth in China versus like 10% in the U.S. So China's injecting a lot of liquidity in the system. So we use MCHI in our portfolio. So I think that's one of our top picks.
And MCHI, just to clarify, is the broadest China ETF. It holds Hong Kong stocks that trade here in the U.S., like Alibaba right here behind me, as well as mainland China stocks. So I think that's why you're getting so much interest in it. It's a broad mover for the ETF business in China. So where do we go from here? Is there do you think there's a broad multi-year move into China? We've seen emerging markets underperform for many, many years now, John. Do you really think that this is the time for emerging markets in general to outperform?
I think on a multi-year basis, you have more upside overseas than you do here in the U.S., right? The trade of the decade has been, large cap U.S. stocks, large cap growth. So, ultimately capital gets allocated to look for the highest return per unit of risk. I think there's a lot of risk in the U.S. large cap growth market. So I'd look overseas if I'm investing on a multi-year basis.
Do you see any signs that investors are putting more money? This has been a call for the end of the 2010s. Let's put more money into Europe. Let's put more money into emerging markets. We had this debate about ESG last year. We didn't see any real money movement. Nobody put any money until the end of the year in ESG. Is there signs that China, emerging markets are getting more money flow?
You're beginning to see more money flowing into emerging markets. That began last year, in the fourth quarter of last year. The other market that we haven't mentioned is Japan, where I don't know what you think, John, but that's another market that we'll see a benefit in a pickup in growth and a more stable trading environment and more investment in manufacturing and growth in manufacturing.
And China, of course, a big supplier of commodities. I'm curious, because you really kind of bucked the trend with a call that commodities are going to do better for the next several years. China obviously would be an impact on that. Is that part of the story, continued China growth?
Partially. I think, Alibaba, Tencent, they're, more kind of domestic plays, consumer discretionary, consumer services plays. So those two stocks make up 30% of MCHI, but I agree with you. If you get any sort of, uppick in global trade, manufacturing, China will do well as well.
Okay, finally, note today, very modest impact. If this would have been 15 years ago and that event would have happened with Iran 15 years ago, oil would be up 10, 15%. Very different world now, correct?
Yeah, I mean, $70 a barrel, that's a key level. So again, that's why you want to own commodities, because you get any sort of conflict, commodities go up, so it's positive skewness is what they call it. Okay.